Basically, London's real estate buyers have all of the power and should be acting as such. This drawn from February's real estate data that was just released by LSTAR. Yeah, with sales coming in at their lowest point for the past 13 Februaries and new listings coming in at their second highest point for the past 13 Februaries and prices expected to drop further, buyers have a lot of negotiating power. Even if their realtors disagree, even if their realtors don't want to submit offers, even if their realtors are hesitant to insult the sellers. Buyers are very much in the driver's seat and should be acting as such.
You are just awful.
So what I want to do today is go over London's real estate data for the month of February, take a look at why this data indicates that buyers should be acting as though they have a lot of room to negotiate, and then go over some realtor math. As we'll see today, I've created a realtor commission calculator which goes over the number of hours your realtor has spent on your deal, allowing you to adjust the purchase price, the number of offers submitted, the number of showings, etc., to find out exactly what you're paying your realtor per hour. As, despite what a realtor will tell you, it is the buyer that pays the commission. That commission is just worked into the purchase price. I will leave a link to that calculator in the description, and we will obviously continue to track London's real estate market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price, the price of a home that represents the most popular set of features, which was up, though marginally, in February, coming in at $558,000 in January, now sitting at $561,600 in February. So we have the benchmark price up about $3,500 in February, still down about $60,000 since this point in time last year.
You're gonna be so very beyond sorry.
And the average price rose as well, much more substantially, indicating that much of that higher end stuff is selling. The average price in January was $591,300, now sitting at $617,460 in February. So the average price up $25,000 in 1 month's time, but still down $24,000 since this point in time last year. And then the median price was also up. The median, that's where half as many homes sell over that price, half as many sell under. The median was $554K in January, and that bumped up about $6K to $560K in February. So the median price up about $6,000 since last month, still down about $27,000 since this point in time in 2025. Next, and ultra important, the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale. That was sitting at 6.8 in January, now sitting at 5.3. That's still a very, very high MOI, the highest that London has seen heading into the spring market for at least the past 13 Februaries. And then finally, the sales to list price ratio, the SLPR, which measures by how much over or under asking a home sells. So if the home is listed for 100K, sold for 95, the SLPR would be 95. That bumped up again marginally in February, coming in at 96.5 in January, now sitting at 97.4. So we've got the benchmark price up about $3,500, the average price up $26K, we've got the median price up about $6,000, we have relatively less inventory sitting on the market, but still an awful lot, and homes are selling for a bit less under asking than they were last month. But similar to previous months, the real numbers are the sales numbers, with sales coming in at 292, the worst sales numbers for the past 13 years. New listings coming in at 741, the second highest new listings in February for the past 13 years, and active listings coming in at 1,556. By far the highest level of inventory London has had heading into the spring market for the past 13 Februaries. Which means, as always, buyers have an awful lot of buying power with so much relative inventory sitting on the market. So few sales, so many new listings, buyers have the power. Ergo, finance conditions, home inspections. If your realtor won't protect your financial interests, get a realtor that will. Get a realtor that will submit those under ask offers. Given that, if you are in the market, you are A, buying an asset that's likely to depreciate in the short term, B, doing so during a slow economy, and C, doing so during a war, you get to call the shots. You can ask for whatever you want. 5-10% under asking. Don't be afraid to go in hard. If your realtor tells you you're going to insult the seller by doing so, if your realtor says it's not worth their time, again, get a new realtor, as yours just can't be bothered to write up the offer. And very briefly to the realtors, you don't just get paid 2.5% commission for writing up an offer after showing 2 houses.
Yes, I can.
Actually, given that we've seen so many realtors unwilling to play in this new game, unwilling to submit these major under ask offers, let's take a look at how much realtors actually make per hour per transaction. So let's start with that average price home of $617,000, and we'll go with a commonplace 5% commission, of which the buyer's agent receives 2.5%. So on that $617K purchase, the buyer's agent is earning $15,436.
That's not how this works.
In all seriousness, though, that is correct. Realtors don't get to keep that entire commission. They do have to split with their brokerage, so let's very briefly get into that. So let's figure on an 80-20 split, so the agent is getting 80% and 20% of the commission goes to the brokerage. Now, of course, some realtors are going to spam my email saying that not all commission splits are the same and some don't get to keep 80%, but if you really want to make the argument that you can't negotiate a higher split with your brokerage when we're trying to justify your compensation, you be my guest. So we'll go with 80-20, and after that split, that agent is walking home with $12,300. So $12,300 in their pocket, but how much work did they actually have to do?
You have no idea.
Let's start off with the Bank of Montreal that says that the average home buyer buys a home after 10 showings. So we've got 10 showings, let's figure on 30 minutes per showing, and we'll add an hour's travel time for each. So on 10 homes shown, so far we've got 15 hours put in. Plus, to be charitable, we'll add 10 offers. Say that this realtor was a really good one and put offers in on all 10 showings. Did the back-breaking work of completing all 8 pages of this paperwork. So again, we'll be charitable. We'll go with 1 hour per offer, 1 hour for 8 pages of work. Now we're at a total of 25 hours devoted to that purchase. So on that $12K commission, you have paid your realtor about $490 per hour. That's if you saw 10 homes and if your realtor submitted 10 offers. Now think how much you paid per hour if you only saw 3 homes and submitted only 1 offer.
I am here for you.
And that $500 an hour gets to the crux of realtors' commission, the dirty little secret that no one likes to tell you. In that, what you're doing when you're paying that $500 per hour is you're subsidizing all of the other would-be buyers that the realtors had that didn't buy anything.
Looky loos.
Yeah, that's what they call them behind closed doors, but that's really not your problem. It's not your problem that your realtor couldn't vet their clients properly. Further, you're also helping to subsidize their downtime. If your realtor only buys 5 houses per year, say at $12,000 commission, well, they're only making $60,000 per annum, and that's hardly Beamer money. But again, that's not your problem that your realtor doesn't have a whole lot of clients or that your realtor isn't overly popular. If anything, their lack of clients, lack of popularity, lack of friends means they should be working harder for you, willing to submit however many offers you want.
Help me help you.
Yeah, Jerry Maguire 30 years ago. Less clients, more personal attention. And as we saw today, they have a lot less clients. This is very much supply and demand. There's a massive supply of realtors and very little demand, meaning the buyers have the power. Now, obviously, there are a few more things realtors do, and this was all averages. They might take that extra little bit of time and, say, send the broker the APS and the MLS, if, of course, they remember before screwing off to Mexico while a finance condition is both in place and ticking very quickly. No word of a lie, that's happened more than once.
My dream was always to be an entrepreneur.
So I've left a line item on that commission calculator for incidental times. Feel free to play around with it as you will. Even if we add 10 incidental hours, that still puts the realtor commission at $350 per hour. So don't let your realtor tell you they worked so hard it's just not worth their time to put in another offer, no matter how ridiculous they think that it is. As we've seen on Reddit, so many times realtors have refused to put in an offer only to see that house sell for less than that offer was going to be submitted. Your realtors are paid very, very good money for what they do for you. You're paying them an awful lot of money that you're going to be paying interest on since that money is worked into the purchase price. Since you very much have the power, they very much need your business. Make sure they act accordingly. If they're not going to act in your interest, get another one. There's literally thousands. So very few, if any, signs of the London real estate market taking off in February. Sales were just abysmal, worse than they were last year, and last year definitely wasn't great for the London's market, as we can see in the benchmark price. As such, if you're a home buyer in this market, if you're willing to buy in this market, you have the leverage. Make sure you use it. Don't let anyone make you feel bad about wanting to. Go back to any Realtor's 2021, 2022 TikToks and see what big shots they were when they were running up multiple offer biddings. It's not right or wrong, that's the market. This is capitalism, it has ups and downs, and for the buyers, right now, it's the ups. Use it while it lasts. We will obviously continue to track the London market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.